Welcome back everybody to the weekend show where I'll be doing technical analysis on stock market. So before we get started, please hit that like button and that is greatly appreciated. And if you're new here, consider subscribing. Now if you want to go above and beyond, support the channel and get some fantastic trade ideas, swing trade ideas, live trading and all kinds of setups, definitely check out my link down in the description for Patreon. So the market sold off pretty aggressively on Friday due to some countries getting those tariffs back. Then we have Apple selling off. We got big names like Meta, Microsoft selling off. We got some news on Russia. Trump sending out some submarine, uh, nuclear submarine. These are just things that are affecting, and not to mention the horrible numbers that came out last week. So the economy is definitely feeling the effect of the being rates staying higher where they are, and J. Powell not cutting it yet. So we might see something very soon, but so far that's not happening. With all that news and everything that is going on, we got all the big earnings. Amazon, another one that we saw a big dump off on Friday. That also caused Nasdaq to come down quite a bit. And now we can see Dow is down 1.23%. Nasdaq took the massive dump off 2.24%, and then you got S&P down 1.60%. We got Russell going down just over 2%. 11 sectors, pretty much everything in deep red except consumer defensive, healthcare, and utilities. So risk off move here in the market on Friday. Stock market map, you can see the heat map here, and it just getting decimated. And all the red you see is pretty much right here. Those big names, Nvidia down, Broadcom down, AMD down, Microsoft down 1.76%. Finally, Apple going down 2.5%. And look at that. Amazon down whopping 8.27%. Even Meta going down with some good earnings. 3%. Google down. We got Tesla going down. So market definitely not looking good. But that was coming. We talked about it in my video many times that, I'm not going long here. And the market is just a matter of time where market does a big rug pull and a lot of people are chasing and they're going to feel that effect. And you can see the healthcare names, Eli Lilly, J&J, I mean, pretty much all are up except one name that actually made a new 52-week low, I believe. That is UNH, just not going the right way. That thing getting decimated. Consumer defensive, Walmart, Costco, KO, Pepsi, all are up on Friday. Nice move there on consumer defensive. And now let's talk about S&P 500 and see where things are going starting Monday. So here on SPY ETF, it's down 1.64%, down about 10 bucks for the day. Came all the way down to 619, 620, and pretty much holding right there over this Bollinger Band, which is sitting at 617 as of right now. So if things starts to come down a little bit more, obviously we gap down, so there is a gap at 630.77 to the upside. We saw some significant volume on that sell side activity on Friday, so that is something to take a note of. I mean, this sell-off can lead to something a little bit bigger. Now, I'm not saying crash is coming. I know there will be people over the weekend saying, oh, Monday market will crash, this and that. Yes, we can go down definitely. But considering how much market went up from 480 right here up to 640, even if we go down to maybe possibly, I would say right here, somewhere around 600, maybe even at this gap 567, I don't think we're gonna go there as of right now. I don't think that's the chance, that's the chance we have to go all the way down here, because Bollinger Band is still here, right up here at 617. That would be still a healthy pullback. There will be no crash, nothing. How fast, how this market went up, it's unhealthy, and we're just getting a correction. So where things can go? Well, first of all, things are going to be oversold. If this thing gets below 620, we could be touching this Bollinger Band right here around 616, 617, and then definitely a weekly, daily retest of previous all-time high. That's going to be around 610 to 611, which should hold here on S&P 500. If not, I mean, you can see there is confluence from the 50-day moving average as well, which is sitting at 611. So if this thing were to come down here, That's going to be a strong buy area to possibly go long as the support can hold right here. If you see a flush right through it, you don't want to be in that move right here down here. There is a gap at 600 that would be a better entry, but just because we got multiple rejection here and finally things broke out to a brand new all-time high, this could be a nice retest and an opportunity to possibly go long into the market. But this is not some kind of opportunity where you would go all in. I mean, it's just an opportunity from coming up from all-time highs, possibly down to previous all-time high. That's going to be a retest of that breakout. So that is all, nothing crazy. It's not like it's down 30% and we should all go in and just buy everything up. Nope, that's not happening. Some of these stocks are still near all-time highs, like Microsoft, Nvidia, Meta. Lots of other stocks are pretty much just going ballistic, right? Now to the upside, if this thing can hold 620, 617, somewhere around there, and makes a move back up to 628, then we might see the gap getting filled also at 630.77 right here on triple Q, right here on SPY ETF. Triple Q. We got triple Q down 2% on Friday, and that is a gap down as well. And we were not able to go back up to this 564ish to close the gap. Now you can see the same story here. Previous all-time highs right down here, 539, 540. And it's only about 13, 14 bucks away from where it's trading right now. So it can come down, but there will be support at 550 where we got a bounce even on Friday. And that's a level of interest to watch going into Monday's session because we have lower Bollinger Bands sitting right there. Underneath that, you're going to see a flush down to previous all-time highs, 539 to 540. There is confluence from the 50-day moving average as well. But if we break through that level, then the next one, the gap fill reversal can happen as well. And this could be where look below and fill. That could also happen. Comes down to close the gap, but would not close the gap, and then pushes back up over previous all-time highs. To the upside, there will be now resistance at 560 because of this 20-day moving average, 564, 566, and then we can talk about more upside on triple Q. And here's my X account. And if you guys are on there, definitely give me a follow. And it's totally free. There is no subscription, nothing. I'm not going to charge you guys for asking a question if you have Roy here on X. Now, I want to share some fantastic trade ideas. Starting with this one, right here you can see July 30th. Triple Q was trading at 570, 571. And you can see, I mean, I don't really make callouts like these right here. Triple Q put strike 550, January 16th, 2026 expiration, 100 contracts. You guys can look up. These are not cheap. Fast forward, what happened on Friday? Did we go in the money? Absolutely did. Not only this play right here, that is a long-term play. We got AMD that I bought couple of months ago. You guys can see right here. I picked up AMD shares. This is just back in December, and that's how I hold my swings, especially when it comes to something like AMD. And fast forward here, you can see AMD. I got more shares that I bought, especially back in April, and those are holding. Sold about 400 shares on that big pop on uh, that's on Friday. And then we also have this fantastic play on Oracle right here. You can see 250 puts, Friday expiration that also paid. And here's another one, triple Q. You see right here. That's gonna be right here. You can see took back in 17th of July, and it was 550 puts. It was a short-term play, and we're still not at August 15th. So this one also out of nowhere came back and paid. Here's another one that is with Costco. So a bunch of plays. Last week was great, especially for puts because everything came down and everything paid. So if you guys are really serious about trading, definitely check out my link down in the description for Patreon, guys. And now if you join, you will be on vacation for a few days, And the next update video on stock market and the big mega caps also will be on possibly Wednesday night or Thursday night. Until then, you're not gonna see another video from my channel. I'll be possibly flying to multiple countries, and then once I get to my destination, after taking some rest, I'll be putting out all these videos. And if you're going and joining, you'll still get access. You just have to, let me know that you guys are interested and you guys got into Patreon and you joined, and then I can give you access and you'll start trading with me very soon. With that being said, let's get right into the market. Dow Jones getting absolutely decimated, down 1.27%, and this one blew through the lower Bollinger Band and pretty much the 50 SMA here, barely holding that critical level where we got rejection before, that 434 range. Now, if that breaks come Monday, the next big support would be at 425.96, gap fill reversal. But on its way down, there will be also support right here where we got a rejection here and here. That's going to be at 428. To the upside, we do have now big resistance at 440. If we can clear that, watch out for 444 to 445 on DIA. On Russell, it's down 2%, and this thing also getting under lower Bollinger Band, which is sitting at 217. So we might see a retracement up to lower Bollinger Band, maybe up to this gap close to 219. But if this thing cannot get over that 215 50-day moving average, and then it's coming down to that 211, 210 range to close this gap, which can act as a big support. You can see multiple rejection here, and now it might be pulling back into that area where there is a gap and previous rejection that can act as a support because we're trading well above that. Now, to the upside, like I said, 217 to 219, that's going to be a key level. We have to get over that level. If that happens, we also need to get over the 20-day moving average at 222, and then it's out of the woods and it's going higher. So we'll see, significant volume on that sell side activity on Friday. So keep a note of that because things can always go down even more. And if you're just buying from the first day of a big red day, you could be down buying too early. So you want to buy, even if you're buying, try to go in and buy slowly so you can average into it as the market pulls back even more. Now we talked about VIX, guys. Before that, well, look at this move. 20, past 20, guys. Just if you go back and look at my last video on stock market, we talked about it. We talked about the Bollinger Band squeezing and the big move potentially coming back up to the upside. And boy, oh boy, did this thing deliver. Now it's over 20. As long as VIX is over 20 to 18 bucks, this thing can push up to 23, possibly even higher. So keep an eye on that. Now, if this thing breaks below 20, we do have support at 18, and then we can talk about volatility leaving the market once again, and then you'll see that rally starting into the market. And that's all I have for you guys, and I'll definitely try to make a video on big mega cap stocks. So don't forget to hit that like button, guys. That's greatly appreciated. And I'll see you soon, right after I get to my destination on that vacation, and I'll start making videos for you guys again.